Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Alex Kwanten, automotive analyst with Forbes Wheels, a trusted destination for auto reviews, news, and advice, to discuss why new car supply is scarce and what that means for consumers. Alex, it's great to meet with you. Welcome back to Trade Talks.
Thanks, Jill. Nice to be here.
What is the reason behind the short supply of new cars and higher prices?
So last year, production ground to a pretty thorough halt because of COVID-19. And also the sort of people willing to purchase new cars sort of dropped off considerably just because of the economic anxieties of the time, and also sort of not knowing whether it was safe to go to dealerships. Dealerships sort of worked around that as best they could. The production lines have gotten restarted, but we're still seeing a considerable shortage of semiconductors. There was also a GM strike last year. We're sort of seeing the sort of tail end effect and knock-on effect of sales slowdowns last year, both on the used and new side. New vehicles are likely to remain scarce because of the semiconductor shortage throughout the year. It's possible that we'll begin to see inventories pop up back at the end of the year, but my guess is that the summer is going to be continue to be a constrained time for new car supply, which of course means higher prices.
How much of a reduction of cars and trucks are expected, and when are volumes expected to recover? How long does the current supply last?
Well, dealers are used to working in a normal time with an inventory of about 60 days supply. Throughout the spring, dealers have reported that they've been down to 29 days, 25 days, 42 days. And that's dealer groups, both the large public dealer groups and individual, mom and pop shops. That is probably not going to recover anytime soon. And my guess is that the summer is going to be the most constrained time because again, of the chip shortage. It's usually, we usually have a combined sales total of about 14.5 million last year, I believe, which is down about 15–20%. My guess is we won't recover all the way to pre-pandemic levels this year. And we've seen some estimates that we could sell about 2 million fewer than we would normally sell in a regular year. It's unknown exactly how inventory will go, because if semiconductors become widely available, production will ramp up, and then we'll be able to see increased supply.
Are dealers able to make money in this kind of environment? How much are they raising prices, and are they able to balance supply and demand? These are big numbers that they're down. I mean, 29 days compared to 60, that's a big amount.
Yeah, they are able to make money. And in fact, we've seen markups on various vehicles, particularly vehicles that are hot new things like the Toyota RAV4 Prime. We've seen markups of up to $10,000 on a vehicle like that. Dealers can make profits that way, but they would much rather have a steady supply of inventory. They obviously demand will make them mark things up, but they would rather have units to sell. And they are quite concerned about getting those units, particularly in the sort of July, August timeframe. I think as the fall comes in, it seems like maybe the pressure might ease just a little bit, but I would expect that dealer inventories probably won't return to normal until 2022.
And Alex, to wrap up here, is it all bad news for consumers? I would imagine if you're paying for the RAV4 $10,000 more than they normally would have charged, when you go to resell that, it's not like that $10,000 is going to go back into the resale price, is it? Well,
actually, it's not all bad news. Because used vehicle prices are up so high, and they have soared about 25% in some cases or more. You really are going to get more for your trade-in or selling it on the open market than you ever would have before. It's possible that if a car you purchased in 2018, you might even be able to sell that, depending on the popularity of the model, for almost what you paid for it. That, of course, offsets these higher prices to some degree because you're getting a lot more for your trade. Also, there are vehicle sectors that aren't that in demand. So if you're a little less picky about what you want, you might try sedans or small cars. We've become aware that in our researching of used cars to give people recommendations on deals for used vehicles, we've become aware of quite a few sort of 2020 leftover sedan models like Honda Fit and Ford Fusion that you can still widely get, and they're usually affordably priced. They're good vehicles. It's just that they're discontinued for 2021.
Yeah, well, and everybody wants an SUV these days as well. Alex, thanks so much for the insight and for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.